Wel, bore da, croeso i'r sesiwn Dangos webinar heddiw. Good morning and welcome to this webinar, which is going to be looking at managed migration to universal credit. It's just been kicking off now through Wales for the last couple of months, reaching North and Mid Wales. The starts there last month. This is by a substantial number, the biggest attendance we've had on a webinar. So I am going to try and make sure that I mute everybody first of all.
Under participants.
Yeah. Thanks for the thing there. Okay, so I'm muting all the current ones, although you can unmute yourself if you need to scream and shout. We're going to be getting the wisdom of Tom Messere at the beginning, and then I will take over to talk about some of the more detailed bits of the managed migration later on. As I say, we've got a lot of people coming in. We've just ticked over the 100 mark on the actual attendees. We've got 250, I think, registered at the moment. So if you want to ask questions and so forth, please put them in the chat. Sam will collate those and give them to us when we've done the two little bits of presentation we've got. And any that we do miss, we will put onto the Dangos forum and try and answer those there later on. So we're going to talk about quite a lot this morning, so it's going to be a bit rushed. Don't worry about any of the numbers on the slides on the presentation. They're there for you to look at later on if you want to. The slides as well as the recording of the webinar will be on the Dangos forum afterwards for you to go back to and have a look at in more detail. We're going to talk about what is managed migration, who it applies to, when it's happening, and how it's meant to work and how it's working in practice. And the really important bit that goes along with that, which is the protection for people who are moved on to universal credit and find themselves, because of the straightforward calculation, worse off, who are going to be, in the main, we hope, protected by the fairly complex rules we're going to talk about this morning. And we're going to look at what it is and how that's worked out and when it stops and how it stops. And then we're going to talk about the experience that people have already got, particularly where the managed migration started off earlier in the northeast of England, and what the statistics are beginning to show about the migration. So with that, I'm going to hand over to Tom, stop sharing my screen so that he can share his, and I will see you in a little bit.
Right, I've got to go and speak to you soon. All right, take care. Bye. Bye. How do I get?
And you're muted, Tom.
That got rid of all, you missed all the narrative about how a seamless segue happened when it didn't happen. So we got the slides, and of course I haven't kept in this wonderful link with Gareth. So why are they not behaving? Okay. So who's affected by this managed migration that's coming up? We're all quite familiar with universal credits ways. Again, don't worry about the numbers and the details. There'll be lots of them on both of our slides, but they're there for you for reference when you get a set. But you can see here, the main point is the two biggest groups who are candidates, if you like, for managed migration are people who are working, getting tax credits, and people who've been long-term ill who are on the income-related employment support allowance. They're the two biggest groups, 46% for the ESA, 38% of people at tax credits. There are some important small groups like lone parents and carers on income support. I was very surprised to see that there was still 100,000 people on income-based job seekers, as that would have been the new benefit for unemployed, would have been UC all the way since 2013. So there are the numbers, and there are some winners and losers. This is a DWP table, slightly rejigged. And you can see that it varies between the benefits as to who wins, who loses. Overall, 50-50. Income-related ESA slightly, for example, is 50 win, 42 lose. But tax credits, it's 30% lose, but 70% should win. So it's different for different people. All of this change is coming through a period of big change for people on these benefits. I've just highlighted the two main groups affected by managed migration. So the working families, where working tax credit, child tax credit, housing benefit will merge into universal credit, but also that change from council tax benefit to council tax reduction, because people have to remember they have to claim that separately, whereas they may be used to claiming it alongside their housing costs. And then for the people on employment support allowance, it will be their income-related ESA and housing benefit turning into universal credit. The other change is highlighted there. So we've still got the migration is still going on from DLA to PIP. It's on pause at the moment, but there are 375,000 people still doing that. And contributory ESA stays with us, but changes its name to New Style ESA. The other ways of moving over to universal credit do carry on. So managed migration isn't the end of it, isn't taking over the world as it is. So you can still do a voluntary migration, which is you can choose off your own bat to just claim universal credit, and you will slip over to universal credit. And some people might want to do that rather than wait for managed migration, because they think they've got advice and they've found out they're going to be better off on universal credit. So why wait possibly 5 years until you get a letter? Why not get your money now if you know you're going to win? Otherwise, you may have to switch to a natural migration. That's the one we're familiar with. It's been going on in Wales since 2018. It's when there are certain changes in circumstances. So, for example, if you move within a local authority, within Torfaen, no problem. But if you choose to move from Torfaen to Ynys Môn, then you would have to make a new claim for housing benefit, Ynys Môn Council, and they would say, sorry, we can't help you, and that's when you'd do a natural migration over to universal credit. Does it matter which way you switch if you're on legacy benefit? At some point, you're going to have to switch. What's the big deal? Well, the big difference, which we'll explore in more detail later, is that only managed migration comes with the full transitional protection. There is a little bit of transitional protection with the others only in a few circumstances. Again, Gareth will be looking at that later. So what actually is managed migration? It was meant to be the main route for people to move from legacy benefits to universal credit. But in fact, because of the delays, the tech delays, the lockdown, coronavirus delays, the delays in starting this process means a lot more people will have moved by the other routes. So the majority, DWP figures I haven't got them to hand, but they are now estimating the big majority of people will move by the other methods, not by a managed migration. So where are we now? Well, there are 4.2 million people across the UK, 4.2 million claims for universal credit already. That will be new claims from people that have newly needed means tested benefits since 2018, when it became when universal credit went full service across the whole of Wales by the December. And then there were 2.6 million people who are still on legacy benefits because things haven't changed for them so much. They haven't had that change in circumstances that would have pushed them onto UC yet. And that's why we're getting people who are in work, who are carrying on in work. Their changes might be changes in income, but they've stayed in work and so not need to claim as unemployed, and people who've been long-term sick. Hence, that's why that's the biggest two groups. So this is a timetable for it in broad outline. This was the original plan A. Let's not take any pleasure or whatever, it didn't quite work out like that, did it? But the point that still remains is we've got these different stages going on. So we had the live service when UC was just for the unemployed. Full service came in a rolling way, finishing off with the Welsh the more Welsh speaking areas in December 2018. And so that's all rolled out. The next step was managed migration, which was supposed to start in 2014 and finish off all done and dusty by October 2017. The stages are the same, but the actual dates moved along a bit, as we all know, and there the dates are for your interest. If you want to look at that. The main point now is the whole thing should be all over and done by April 2029. I think we can have confidence that it will be. The DWP now know exactly what the computer can do. It can do amazing things. It processed 2.5 million claims in 4 weeks during at the start of the pandemic, for example. But when is the timetable in detail? It comes in 3 phases in the main rollout, which is between 2023, from last summer, right through to 2029. You've got the first phase, which is from the start point until this coming April 2024, where the focus will be just on people who only get tax credits from the legacy benefits. Then between 24 and 25, it opens up to other tax credit people. For example, if you get tax credits and you get some housing benefit. And then gradually through the year, it will open up to other claims. So from July, it will open to DSA and child tax credit. From September for income-based job seekers allowance. Income support is happening from April as well, income support and housing benefit. So you've got these different times where it's opening up. The start date varied to where you were. So South West Wales was from August 2023. They all started slightly earlier than originally announced. South East Wales kicked in from October 2023. And Mid and North Wales were due to kick in from February, but I trust Gareth when he said it was last month. It could well have been that they started in January, because there's been a tendency to aim for that but go early. So for once, UC is moving from late to early. Ignoring the startup dates. Okay, I'm living in Llandudno, I'm not affected for a bit. It doesn't matter. Once it's got going, the order in which you will receive a migration notice will be purely about the benefit that you're on. So most people are going to slowly move in over the coming year. The one exception are people who are on income-related employment support allowance, who are not also getting child tax credit. The child tax credit people will come in later on in this year, will start getting their notices, because tax credits want to close down the tax credit system. But anyone who's not getting child tax credit, regardless of any other benefits they may get, won't receive a migration notice until the year April 28 to April 29. So that's a big chunk of the people that we may be working with have a bit more time, as it were, to make it happen. What does that delay? A lot of people be going, phew, I don't have to worry about universal credit for another 4 or 5 years. There are implications. The official reason for delaying is not to focus resources. That will be a sideline. The official reason is purely fiscal. They're going to save £1 billion by delaying the switch of ESA claims to UC. And that's because those who would stand to win under universal credit, and as we saw, it was about 50-50 roughly, but the winners might not bother to claim universal credit until they get a migration notice. So they will be shortchanging themselves, as it were, for the next few years. So that creates a saving. Meanwhile, those who lose under universal credit, who would get full migration, full protection under managed migration, may only get a little bit of protection or no protection at all if they move over under a natural migration that might come along because of a change of circumstances. And there's also means they need less staff, because if they're not doing everybody together, they don't need quite as many universal credit work coaches, support staff, all of that. So the extra tranche of universal credit work coaches can focus on mainly tax credit people this year and next, and then the same people can then limber up and focus on ESA people. There are currently 1.2 million ESA claimants awaiting the migration, but the DWP reckon that only 600,000 of those will still be on income-related ESA by the time they start doing the managed migrations. And it's not purely about saving money. That is the only policy motivation. But the DWP do say that they hope they will have built up lots of experience, got through all the teething problems of these early days of managed migration, and therefore be in a better position to focus on what may be a more vulnerable group swapping over. So the advice to anyone who's on legacy benefits and will at some point get a migration notice would be, check now, are you going to win or lose under the UC sums? If you win, well, choose a time, get the advice, any advice you need, any support, and prepare to swap over to universal credit now. Why not? Get the extra money, but do make sure you are a winner, otherwise you're going to lose. If you lose, you might want to hold on tight by your fingernails to the doorpost until you get managed migration, because you get the full protection. But it's also worth thinking about it. If you're worried or your circumstances are changing, there is some protection that you would get now, but ahead of your migration notice. Will that work for you? For some people, that will be exactly the same as what they would get under the managed migration. For others, they would do better if they could hang on for a managed migration. But get advice about will you win or will you and be good to go, or check your current benefits. Is there something you could do? Are you missing out on your current benefits? Could they be maximized? Because that will give you more money now, but also put you in a better position when you come up to your managed migration to UC. So what happens with the managed migration process? In theory, there's warm-up stuff. So at the bottom of letters, notices from your income-related ESA or tax credits, there will be a little mention, little message. It's, universal credit is coming. You'll be transferred. You'll be contacted. No need. Don't worry. Don't do anything. There is a HMRC tax credits leaflet, which has gone a little bit too enthusiastic and has got into some difficulties because it almost encourages people to claim UC, which perhaps they shouldn't, because they're going to get their managed migration quite quickly. Then you get your migration notice. Come the day, it will be at random, not by geography or alphabetical order, or they're not going to do a street at a time. So that's your migration notice, which will give you 3 months notice that you need to claim universal credit instead. And sets the deadline day. The deadline day is when you should aim to get your claim in for seamlessness. But there's also a final deadline day. We're going to explain those differences in more detail. Is it any different for claiming UC under managed migration? In some ways, no, because it's exactly the same process you have to do. You have to make a new claim for universal credit. In other ways, yes, because UC will know that you've been issued a migration notice, so you will have that 3 months to choose your timing. If you do miss the deadline day, you can get a month's backdating automatically, whereas normally you have to crawl over hot bricks to get backdating on UC. There will be that transitional protection, which could make a massive difference to the amount you get. And there is a dedicated helpline for people issued with a managed migration notice. And there's some warm-up notice. What does a managed migration look like? The actual notice might vary a little bit because they're experimenting to find the best formula. But here's one, so it's you can read it for yourselves. But the main point is it will have a date 3 months from the date of the letter, saying you must claim UC by then. There's the helpline. If you cannot claim UC, contact us. How much you will get? Well, most will actually be different. Few will stay the same as such. and they're encouraging you to claim early because that stops problems. But our suggestion will be take your time, use that 3 months wisely if you need to. So you've got 3 months when you've got this managed migration notice. But way up, there's the urge, right, I want to be good. I don't want the hassle. I don't want to forget it. I don't want to put it behind the clock. I'll get on with it. And a lot of people do that. But do use that 3 months. If you need any support, if you're worried about the process, use that time to get some advice. You do not have to act when you get the letter. And it also is a time to check out your finances and what the best thing to do, and check out the best timing, that sort of thing. But can you sort out, say it's identified that you potentially could get some more legacy benefits. It might involve perhaps your partner getting personal independence payment, and then as a result of that, an extra severe disability premium chiming into your benefits. That all takes a long time. Is there any hope to do that when you've only got 3 months notice? Yes, there is, because as long as you start that process while you're still on legacy benefits, once it goes through, and it might take a year if you have to go through an appeal for PIP to get it all sorted, you can still go back to revisit those legacy benefits, have those increased, get a back payment, and have the transitional protection that you had on the day you moved to UC, have that revised and increased accordingly. So there is still scope for doing all of that. Usual timings apply, so don't choose to apply just before you're expecting a nice check from child tax credit, because that check will not be issued. So make sure that you do it just after a payment. Choose your time in the month for earnings if you can, so as to avoid as many problems with the different months and variation that can happen if you have universal credit at the end of the month. If a notice is issued in error, it can be revoked. There are certain groups that don't have to do it. For example, if you're within 6 months of pension age, you shouldn't be managed over to UC. Instead, you should be left on your legacy benefits until you've come of age to make a pension credit claim instead. What if you need a bit more time? Well, that 3 months can be extended for a month at a time. So it can be extended more than once. So if you just need a little bit more time because there's a big queue at the advice services, then just go for an extra month. If, on the other hand, you are going through a life crisis and this is the wrong time for the next few months, you can have the whole thing put off till later in the timetable, have it deferred. You need some good cause, and there are some examples of good cause in the DWP guidance. It's not an exclusive list. So if there's a good reason, on the whole, people are telling us that DWP are being quite sympathetic and granting extensions. So back to these deadline days and falling off benefits. So deadline day is the 3 months when they would like you. The simplest thing would be, can you get the claim in by deadline day? Then there is final deadline day. Now that is basically a month on from deadline day. It is the last day of the universal credit assessment period had you made a claim on deadline day. So that extends for a month. Now, if you get it in within that month, all will be well. You might have a bit of a problem. Your legacy benefits will stop on deadline day. So that will remind you and put you into a flat spin panic and make your universal credit claim. But if you make it within the next month, your universal credit will be automatically backdated, and all that links that can be really important, getting the transitional protection, getting the your work capability assessment moving with you from ESA on to universal credit, all those good things that run on 2 weeks run on, they will happen. If you miss final deadline day, they will not. You're still free to make a new claim at any point 3 months down the line when everything's gone pear-shaped, but that will be a completely new claim with none of the protections above. DWP don't want this to happen. They don't want people falling through the cracks. It's bad news. So they're going to be texting people, ringing them. They may arrange home visits for vulnerable people and so on. So there's a range. They will be keen to get you And that's why they're very keen to offer an extension if you got yourself into a bit of a muddle. Okay, without further ado, over to Gareth.
Thanks, Tom. Great timing there. Could you unmute and share your screen if you would?
Yes.
And then I'll share mine.
Okay.
Okay, yeah, I'm doing that. So hopefully I'm now going to be visible as well. Let me just try and do that. Yeah. I'll remind people that if you've got questions you want to ask Tom and I as we move at the end of the session here, please do pop them into the chat, and Sam will collate them and give them across to us in her usual seamless and smooth manner. So I'm going to be talking a little bit more about some of the detail around moving on to universal credit. That there are some issues in general that a lot of people will face about the process. HMRC are going to be told that a migration notice has been issued, and they might, we're not clear about their processes, do some checking to make sure that the tax credits that they are currently paying are based on current situations, in order to get what's called the day rate correctly. They will be retrospectively certainly finalizing the tax credit awards after people have moved on to universal credit. So there will be some checks around underpayments and overpayments. As I say, there's this daily rate, which is how the people are going to be assessed in terms of the tax credits they were getting. That what depends, of course, upon the protection that will be given to them. The protection is based around what you were getting and what you would get, and it makes up the difference if there's a shortfall. So it's quite important that those daily rates are correct. The gross earnings that are used in tax credit are going to be converted by DWP to an estimated net earnings figure, and there are some question marks around the way in which that's likely to happen for self-employed people, but the calculation will be done, and that's what the earnings will be based on, because universal credit, of course, is based around net earnings figures, not the gross earnings figures that tax credits use. All of the figures that matter depend upon your situation on the day before you move on to universal credit. That's called migration day. So selecting that day, and that's based around when you claim, obviously, can be really important, as Tom said. So if people are unsure about the consequences of which day they choose, seek some advice, try and maximize the tax credit situation before you get to that day. Really important factor, if you're not getting any housing benefits, so you're paying rent, but you're not getting housing benefit for various reasons. You might, for example, have too much capital to be able to claim it while you can still get tax credits with that amount of capital. Then there won't be any housing costs in the transitional protection sums. And that can be kind of really important, because, of course, the housing costs will appear within the main universal credit sums, as you'll see a little bit later on. That can have a really big change and really big effect on the calculations. We're going to talk about those kind of capital issues in a little bit there. One thing that has worried a lot of people and is causing a great deal of concern is that HMRC have taken the opportunity, really, to look back in their records for many, many years and see whether there have been overpayments of tax credit in the past that up to now they've really, in many cases, just kind of ignored. They're now taking the opportunity of people being moved off tax credits into universal credit to generate demands for repayments of these overpayments. They've done quite a big trawl a long way into the past, even where things might, under the rules, be out of time, and charged them into universal credit. We know from the latest figures that 90,000 tax credit overpayments deductions are already being made from universal credit for people that have moved across there. Now, universal credit have got no idea of the reasons why those overpayments might have occurred, whether they're accurate or when they happened, and they have to be challenged via HMRC. And of course, that's only going to be really feasible as long as there still are, people working in HMRC on tax credits, and the tax credit system exists. Universal credit does have a discretion to not recover these payments for the usual sorts of reasons around hardship and official error. But it's quite difficult, of course, with the absence of any information to be able to get that in place. So transitional protection itself, well, as Tom said, there are a number of ways of being moved or of moving onto universal credit. And it's only this managed migration that comes with the full transitional protection. And that's designed to compensate people for the difference between what universal credit they would get under the normal calculation and the amount of legacy benefits that they were getting before they moved. And that protection kicks in. It only kicks in for the first month in full. It's possible for it then to start being reduced or removed even. There are, again, as Tom said, some particular sorts of transitional protection for people who found themselves worse off because they were getting severe disability premium in legacy benefits, which matters a lot, give you a big increase in income. And there's no equivalent of that in universal credit. So there's a special kind of transitional protection element that kicks in there. I'll talk about in a minute. So we have these different sorts of transitional protection. We've got some particular protections that apply only under the managed migration. Tax credits doesn't have a capital cutoff in the way that other means tested legacy benefits do. Most of those for working age people stop if you've got more than £16,000 in capital and savings. You're just not entitled to it until those savings drop below £16,000. Well, tax credit claimants will be entitled to get, in that situation, who've got more than £16,000 savings, will have some protection for at least a year. We'll talk about that in a second. There are some students who wouldn't be able to get universal credit, but who have been able to get some help from legacy benefits because, for example, they're sick. There'll be some protection for those people. And the main transitional element is the one that is the difference in the total amount of legacy benefits you are getting and the total amount of universal credit that is calculated for you. And again, the SDP, for those severely disabled people, well, that comes under other migrations as well as this managed migration bit. So looking at the capital disregard, first of all, as we say, there's no £16,000 capital cutoff in tax credits. Tax credits just look at the income from capital and savings that's taxable and use that in their calculation. So we know that 70,000 tax credit claimants about have more than £16,000 in capital. So the risk for them, of course, was that if they were moved onto universal credit would just say, but you've got more than £16,000. You're not entitled to any universal credit. So the transitional capital disregard has kicked in there. And the way that that works is that £16,000 limit just won't apply for the first 12 months after the managed migration. There will still be this tariff income, this notional income that's calculated from capital for UC. It doesn't use the real kinds of income from capital, savings, interest, dividends, and so forth. It uses a notional calculation of £1 for every £250 a week over £6,000, £4.35 a month for every pound over 6,000, every pound for each £250 over £6,000. So that tariff income will still come into the universal credit calculation. If you stop getting universal credit for up to 3 months, because, for example, your earnings increase, but you reclaim it within that time, then that 12-month disregard can continue. But otherwise, that disregard of capital would stop. At the end of the 12-month period, then if you've still got more than £16,000 in capital and savings, universal credit will stop. If you have less than £16,000 in capital and savings when you transfer, then the normal rules will apply. That deemed at tariff income of £1 for every £250 over 6,000 will kick in as income in the calculation there. So you might find yourself in a situation where you're in that 12-month period, you've got more than £16,000. Don't go wild thinking about spending it in order to make sure that at the end you've got less than £16,000. There are all the great rules around deliberate deprivation. The core part is that if you dispose of some of that capital, because you know that it will give you an entitlement to benefits after the 12 months, then you might really fall foul of those rules. You're fine spending capital money to reduce debts or of any sort or for reasonable expenditure. But if you choose to give it away, and the reason you give it away is not the only reason, getting benefits isn't the only reason necessarily, but is a significant operative purpose, then you can be treated as having deprived yourself, and it will still count at the end of that 12 months period. So if you are looking at using that extra money you've got within that period, do keep receipts, do make records, and do make sure that it's reasonable expenditure that's gone in there. The student exemptions, well, some students who've been eligible to claim legacy benefits, for example, 6 students wouldn't be able to get universal credit normally, but they will be able to get it if they come under a managed migration process for the remainder of the course that they're on while they're getting while they were getting the legacy benefits when they claimed it in the beginning there. So how is it meant to work? Well, the sums are not too difficult in theory there. First of all, you need to work out how much somebody was getting from the legacy benefits, what the total amount they would have been paid in the last month was from those 6 benefits that are being taken over by universal credit. Remember, tax credits are the start, but we're going to see all the other legacy means tested benefits kicking in as well, except for council tax reduction. So you add that much up. You compare that with what's called the universal credit indicative amount. Now, this is universal credit calculated on the situation on migration day under the normal rules, but with some kind of tweaks. First of all, as I said, it doesn't include any housing costs if you weren't getting housing benefits. So even if you were paying rent, that won't appear in the indicative amount. It will appear in the actual universal credit calculation, but not in the indicative amount. Universal credit will assume that the child tax credit children that were claimed for will be the ones that count. They will assume that the childcare costs are the same there. They will assume that your earnings are what was being used in the tax credit and daily rates calculation. Now, if you actually end up with a calculation for universal credit that's 0 under these indicative amount rules, there's another little separate calculation designed to provide some protection. I won't go into any details on that. You can find details about that in other places, and we'll put that up in the forum as well. And then you just take one away from the other. So if your legacy amount is higher than your universal credit indicative amount, then you'll get a transitional element. Now that transitional element is then put into the normal universal credit calculation for the first assessment period, and that's how you calculate what the first payment is going to be. So here's an example. I'll gallop through of that. Single parent with 2 children, paying rent but not getting housing benefit, might not have claimed it, might be some reason why they didn't get it. Their tax credit on gross earnings of £8,669 a year, so below tax and NI thresholds, and the net earnings will be the same. So looking at that calculation, the first thing we do is we calculate the indicative maximum universal credit, and that's an allowance for adults at the standard rate, an allowance for children at the standard rate, nothing else, no housing amount here because they're not getting housing benefit. So that works out the maximum amount of universal credit for the indicative sum at £953.32. Then we go on and look at the indicative assessable income. Now, the earnings used are quite a lot lower than the earnings they've got, £49.99. And there's a very good reason for that. In terms of calculating your entitlement, in this case, you'll take away the income, which is that earnings figure here, from the maximum amount and arrive at an indicative universal credit amount of £903. The reason those earnings are lower is because there are no housing costs. Then you get a higher work allowance figure within the universal credit sum. Universal credit disregards earnings depending upon how much you have by way of housing costs. If you have no housing costs, a higher amount of your earnings will be disregarded. And that's why the indicative income here is surprisingly low. Then we go on to look at the element that we need to do to calculate the transitional element. The first thing is how much your income is from legacy benefits. Here we only have those tax credit figures. Converting them to monthly amounts, we end up with a legacy amount of £1,360, and that gives us a transitional element of £457, and that's because we look at the legacy amount, we look at the indicative universal credit amount, and we see that the legacy benefits are quite a lot higher than the universal credit amount, and so the difference gives us that transitional element, £457 and threepence. So that gets moved across into the first actual universal credit amount here. So now we look at the needs side of it, the maximum amount figure that universal credit uses, and we have the same amount for adults, we have the same amount for children, but now we've got an amount for housing that's come in because they're paying rent and it counts in universal credit, and we have that transitional element that we've just calculated that comes in. So that gives us a new and quite different maximum amount of universal credit. Then we look at the income, and the earnings used is much higher than it was in the indicative calculation because now there are housing costs in the sum, and so the work allowance figure is lower. That's the lower element because of housing costs. So more income is being taken into account. So when you look at that UC income figure, £188.59, then we have an estimated universal credit amount of £1,700. So because we've got the higher income, that's changed the calculation. And because we've got housing costs and the transitional element, that's also changed the calculation of the maximum amount. What happens in April? We've talked about the fact that this transitional element is fixed at the point at which you migrate. But as your benefits increase, as extra elements come into play, as rates change, well, they will be reducing the transitional element. And just the ordinary uprating figures that come in April this year, the increase in the personal allowances, the increase of the other allowances, mean that that transitional protection element will be reduced by £61. So when somebody's looking at next year's benefits, the uprating that normally increases the actual amount of benefit you receive, they won't see an increase if their circumstances don't change, because all that happens is the increase that would have been £61 on the extra allowances is removed because of the reduction in the transitional protection. I'm going to be kind of galloping on as quickly as I can do here. The issues around reporting changes to HMRC before the migration day, important because when you're looking at that transitional protection, in order to maximize it, you need to make sure that you are getting the right rate of tax credits at the beginning. I won't go into details about the SDP transitional element. It is an important thing for people who've got that severe disability premium, and the rules that have changed yesterday mean that not just the previous protection about losing that severe disability premium comes into play. But from yesterday, there are also additional amounts if you would have lost your enhanced disability premium and your ordinary disability premium or child disability edition because of the rules. There's an extra amount of protection that comes in from yesterday. And again, we'll look at this in more detail on the forum. We'll put a post up around how the SDP element works and how the different figures for the severe disability premiums work there as well. We talked about the idea that transitional element is another bit of the how much do you need sum within universal credit, but it is that ability, that deliberate aim for it to be reduced because of any subsequent changes that may cause problems in the future. We saw the figures for what happens just because the benefit rates are going to increase in April. So it can be eroded for many reasons. If your income changes, that's not going to erode the transitional element. That's not one of the things that does change it if your income goes up and down from month to month. But any changes in entitlement will do that. So things like the uprating, things like getting an element accepted, suddenly being able to get the limited capability for work and work-related activity. If your rent increases, if you have another eligible child, all of those can reduce that transitional protection. Any changes in your childcare cost won't. Those will be ignored. So normal UC amounts of increase in your sums will reduce that transitional element so that you don't see any real gain from them. And of course, once those element is completely eroded, well, you're back onto the normal universal credit. So then you will see the benefit of any increased gains and rates and so forth. So the idea is to protect you against a sudden drop in income from migration, but not to protect you long term. The sudden loss, you can lose it completely overnight. If you form a new relationship or you break up from a partner, you're on a new claim, no transitional element there. If your earnings fall consistently over 3 months, you were earning enough in the first month to be over that administrative threshold for having work conditionality, and then it falls below that figure, then your transitional protection can stop after 3 consecutive months there. And there are issues, as I said earlier, around self-employed people. Now, what do we know so far about how it's working in practice? Well, the DWP issued some figures a while back on the early experience that they had, where the calls to the migration line came from and what the questions were, when people made a claim and when they didn't make a claim, how long it took them to do that, and how many people were getting transitional protection. About half the people in that initial phase were getting transitional protection. We think, or CPAG and Zachariah 2000 think there's a wider problem of people falling off benefits. About a quarter of the people they think sent migration notices in the first half of last year didn't end up claiming universal credit, so presumably lost their legacy benefits. And quite a lot of claims were stopped as well. Now, we've got some very new stats that came out this week. And looking at those, slightly worrying in a sense. We know now much bigger figures, of course, than from the discovery phase, that 350,000 notices were sent to households, and that was 520,000 people. A lot of people made the claims, but much lower numbers. There were 85,000 transitional protection awards from those 117,000 household claims. So that's much higher than in the discovery period as a percentage. Again, 31,000 people had their benefit claims terminated. That's much higher as well. And a lot of people still going through the process of moving that 3-month period and so on. And a little bit of analysis that I did yesterday on that, looking just at those claims where the 3-month period had ended, so but we might expect them to have claimed, comparing 2022 July to July to September, against the 2023 figures. So these are the discovery ones, much lower numbers, of course, where we were looking at 77% of people had to be sent reminders, 85% of the claims claimed in the end, 75% of them by the deadline, the rest of them later. And about 14.5% of those cases didn't claim. But if you look at the last last year's figures now, July to September, well, the 77% of reminders went up to 82%, so they were having to jog people. The 85% of people having made claims dropped to 62%. The claims by the deadline dropped from 75% to 58%, although there are 20% in progress. And 17, almost 18% didn't claim, up from the 14% there. And who are the people that aren't claiming? And there's some really worrying figures looking at single people. So when you look at the people in that kind of the last year who were being sent notices and who claimed, well, the all people figures, 520,000 migration notices sent, 31,000 of those people didn't claim. 31,700 of those people didn't claim, of which 31,280 were single adults. Only 440 couples didn't claim in that period. And that's an astonishing difference. 18% of single adults hadn't claimed from those cases, against 0.13% of couples. So there's a huge difference there that really does need some kind of explanation. We know that people's universal credit claims were made at different times during that 3-month period, an initial peak and before people's, and then a major peak at close to the deadline day. We know that from the experience of advisors, it's really worthwhile putting in training, putting in workshops for staff to help people with the situation that they're facing. We know that there are problems. Capital figures seem to be fine, but decisions are taking longer. And from the experience in that case of Durham, all of the transitional elements they'd looked at have been miscalculated in some way, mostly too high, some too low. And that's really time consuming for advisors and worrying, of course, for the clients. There are some resources that you can look at to get reports and help with those. They'll be on the forum there as well. There are issues for specific groups of clients, part-timers, disabled people, self-employed, and disabled children's parents there. There's a interesting query around what happens to the working pensioners who are getting tax credits. They can still get in-work benefits on that basis. They're going to be migrated from August onwards. And there's a real question about what protection they will get. We are told, I've been battering away with some other people against DWP who say there are regulations in preparation to provide some protection, but we don't know what. We're about to release a reckon of people who actually want to do the sums around what should be the amounts of transitional protection, because it's quite a complicated sum, and there'll be information about that. I'm going to gallop through and remind you that the Dangos courses are still running and will be running up until next month for this round. And we've got lots of courses on different subjects, and you can find more details on those, again, on the Dangos forum at dangos.wrac.wales. I've overrun quite a long way, I think, so that's the time now for us to be bombarded by questions, hopefully. First of all, are there any that have come in from the chat, Sam? I'm going to stop sharing the screen, and well, I'm just going to invite Tom to unmute and join me as well. So,
yeah,
right.
Yep, we have had a couple of questions. One says, I am a corporate appointee manager for a domiciliary care provider supporting people with a learning disability. How do I manage all of the application claims at once?
Look from me. Yeah,
with difficulty. Yeah, it's going to be a huge challenge. They won't all land at the same time, but you'll be going through a period of them. And I assume as an appointee corporate, it's going to be more of your clients will be on the income related ESA phase of things, which will be 28, 29. So at least that gives a bit more time to prepare. You'll get some, of course, you'll get your teeth into it you'll have some people who are working, getting tax credits, and they will be in this first wave. Yeah.
Okay. We have another question. Is the savings maximum amount changed once migrated?
The £16,000 limit, no, that stays in place. It's only that if you have more than £16,000 when you migrate, that it doesn't hit you for the first 12 months or the first 12 assessment periods. You'll still have the notional income that they calculate, which is a very high notional income on anything between £6,000 and £16,000, but you won't face that cutoff because you've got more than £16,000.
Okay. What is the current guidance if someone with a terminal illness SR1 form gets a migration notice?
It may be, I would hope that it's potentially exempt, but I will check on that and get back and put a reply in the forum. The SR1s, by the way, are disappearing now because it's all DS 1500 because all the rules are now lined up. We had that weird time in between where there were two different forms for people. The SR1, I mean, I'm sure they'll accept them, but now a DS 1500 will do for all the benefits, whether it's a sickness or a disability benefit now. I will check on that and get back.
Okay. We have another. Do clients have to get independent advice during the notice period, or will the DWP be advising?
Probably neither to an extent. Certainly, there's no requirement for you to get independent advice. It's very wise if you can get it. There is a migration helpline. I'm not entirely clear on what they will help with, but I'm pretty confident that they won't be advising you on the best day to claim and those kind of issues around entitlement to other legacy benefits. They're looking really at the process of migration, not at the choices you might be making.
Yeah, I think the DWP won't be doing individual advice, and maybe a little informally on the side, but there will be, there's good publications and website stuff and information for people able to access that sort of stuff. But they and the helpline mainly seems to be from the stats and the experience reported by Doham. They're helpful mainly about extending, getting an extra month, or also, the biggest query is, I can't handle online claiming. Can I do it by the phone? And I think, again, DWP are being more relaxed about accepting a telephone claim than they would normally be on the ordinary helpline. So that's the limit of help that's going from DWP, I think.
Okay. We have another. Is there an online calculator I can use to determine how much universal credit an applicant would theoretically get?
There are a couple of online calculators that look at the normal universal credit calculation. Turn to Us has one on a charity, as Charity has one on the web, Entitled To has one on the web, so you can find those. But in terms of the transitional protection, not at the moment. We're about to release, as I say, a reckoner to do those calculations. That's in final testing at the moment. But that's designed for advisors. It's not designed for people to use about their own claims. So it's complicated, and there are some traps built into the transitional protection calculation. So find an advisor, I think, rather than try and do that bit yourself. But in terms of looking at what universal credit would be, especially if you're thinking about, well, would I be better off if I moved naturally, and then you don't have to worry about transitional protection, then yes, use those online calculators. Turn to Us has one, as I said, and Entitled To has one.
Okay. And another, if there is a tax credit overpayment charged on the migration, do you contact the UC migration helpline or HMRC?
HMRC, I think, is the answer for that one.
Yeah, it depends partly on probably both, actually. HMRC will be the people that you could while they're still going, where you could challenge and is the overpayment actually correct? And you could also, but they will have passed on the overpayment, so they won't be looking at whether you should repay it or not. They will have put the charge over to your universal credit account. They might withdraw it if you manage to convince them otherwise, but then it will be to universal credit, who operate the same rules about recoverability, official error and severe hardship. The difference is that HMRC have been operating those rules. Universal credit haven't done it at all until a court decision said, hold on a moment, you need to do this. And now they're beginning to do it. And they're talking to HMRC about that process. So it may happen a bit. There'll be quite a few. So hopefully DWP will become more responsive about whether you need to repay these amounts.
Okay, another, are citizens' advice still doing the in-person help to claims service? As we've been informed, it's now only available on the national helpline. People do require the in-person help due to vulnerabilities.
I'm told that it's now only over the phone as well. The face-to-face service has stopped, as has the face-to-face pension-wide service, I think.
Yeah, what DWP was saying was that, yeah, well, they're carrying on funding phone and online as well, but they're not funding face-to-face. Instead, if people need face-to-face, pop down to your local job centre and the DWP will do it. But this will be a whole new adventure for DWP, because they often great at informal advice, but they're not set up to do advice. But maybe they've all been on all sorts of universal credit training courses, and we'll sort that out.
Okay, another one that's just come in. If there is a tax credit overpayment, there should be a decision. This would then be challengeable?
The question is where the decision lies within HMRC, but universal credit just accept the figure that's passed across to them. The problem with challenging those tax credit overpayments is that many of them go back literally decades, and some are probably time stopped, and some just finding any evidence on which to challenge them or getting the evidence from HMRC will be very difficult and probably very lengthy.
I do wonder if there's going to be some sort of judicial review challenge for these old ones that normally HMRC couldn't pursue, but by transferring them onto universal credit, it's a bit like laundering an overpayment. It's a completely new charge on your universal credit, except universal credit have got no idea or information why you owe them this money, but you do because HMRC have taken the money out of the DWP. So DWP would like the money back, please. So all UC will do is consider, is there hardship or not? They won't go back to the original decision, which would be very difficult to go back to. That's going to be a matter of trying to persuade HMRC that they've been rather naughty, or that they've exceeded 6 years and should never have done it in the first place. That might take a judge to sort that out.
Okay,
we're
and
over only past our 1 o'clock, but we'll carry on for a few minutes. But we'll also put up a migration topic in the Dangos forum, and of course the recording of the rest of the session will be there as well. So people who do have to leave, then by all means come back to the forum or look at the recording. But we'll carry on for a bit with more questions.
one final one, actually. You mentioned that if your relationship status changed, then that would have an effect. But if you are getting transitional protection as part of a couple and your partner dies, what happens then?
I think that still, you still get hit by that. It's still a different claim, because universal credit for couples has to be claimed by both people. Then that couple claim can't continue. It has to become a single claim. And as far as the rules are concerned, then the transitional protection stops, because you'll be moving on to a very different kind of calculation.
Okay, and just one final technical question. Am I able to share this recording with my colleagues?
Yes, you'll be able to download it. It'll be up tomorrow, the day after, on the Dangos forum, and you can point people to it. It's just going to be a YouTube link to which you can feel very, very happy to share it if you find it useful. The slides will also be up there. I see that Jane's just popped up a question on that. The slides will also be up on the forum as well.
And can you provide a link for it, please?
Yeah, I'll put that in the chat now. And as I say, it is just at dangos.wrac.wales. So I'm just typing like mad now.
I'll see what spelling comes out.
That's a very good point there. No. I think I've actually managed to spell it properly. So hopefully it's there now. Yeah.
Oh, yes, that looks good. Yep.
And I see Alison has put up a question about what happens if a child leaves school. And again, it depends, of course, upon whether leaving school is not necessarily an end to them being a part of the claim for universal credit for a while at least. But yes, it will be a change in the claim.
And that could be another one to think about when you're planning when to make your universal credit claim if such a change is coming up, and you know the child is wanting to leave, and what will be the extension period and all of those times that they still be part of your claim. You do want them to get more transitional elements, so that's another timing consideration that you might want to talk through with an advisor if it's getting a bit complicated.
Okay, that the last one then, Sam?
I believe so, unless I missed one somewhere along the way. I don't think I did.
Okay, in that case, we'll draw the session to an end. I'll stop the recording, and as I say, that will be put up on the Dangos forum tomorrow, or the day after. We'll put a topic in the forum to discuss migration issues as well. I have to say the discussion part of the forum isn't being very well used at the moment, so maybe that will liven things up there. And with that, Tom, thank you very much indeed for doing the session this morning. Sam, thank you for doing all of the marshalling of things there. And don't forget, Dangos course is still available for booking in-house and public courses as well. And we're confident that there will be another round of training, similar to Dangos at least, over the next year or so as well, coming up in the summer, I believe. So with that, thank you very much again, and goodbye.
Diolch yn fawr, pawb.